I was actually recording. I thought I was recording. I thought I was live for 2 minutes talking to myself. Sorry for the delay. It is the 14th of May. It's Saturday. It is 11:02 a.m. Eastern. And we're going to talk about some stock market news today. We're also going to cover some charts. We're going to answer some questions, do a Q&A. I'm going to try to give you all the stock market news and updates I can and my thoughts and opinions. None of this is financial advice. If you're new to the channel, welcome. I'm not going to ask you to subscribe and hit the like button yet, but I will later because I'm going to first show you how valuable this channel is, and you're going to want to subscribe. So let me prove myself to you guys. Good morning. Hopefully you guys can see me. If you could let me know that you can hear me well, that you can see me, I will kind of get kicked off here in a minute here. So good morning. We got a $10 pledge from Caleb already. Thanks, Caleb. I've got some questions on Snow, Crowd. I'll get to those in a second. So good morning, everybody. Hope you guys are doing well. What is your take on Roblox? Can you guys hear me? Can you see me? Let me know. I'll get started here. So the first thing that I'm going to do today is I'm going to talk about some Twitter news. So Charlie is a great follow on Twitter. If you don't follow me, my handle is @FiredUpWealth, so definitely check that out. I can see and hear you well. Thank you, Temp Premium. I appreciate that very much. As a streamer that's going live, it can be nerve-wracking not knowing things are working because it is very important for me to respect your time. So I appreciate that very much. So hopefully you can see my screen here. I've got Charlie up. In the last 70 years, the only time consumer sentiment was this low without being with the U.S. being in a recession, without being in a recession. I think we technically probably are in a recession. It's just, it hasn't proven itself. So a recession is 2 quarters of basically suppressed GDP. We've already had one, and we're probably going to get another one here the next time they report. So we're probably in a recession, which is why the market is gyrating. There's lots of geopolitical events. There's just a lot of risks. You think of inflation, that's the big one. Of course, interest rates are try to combat inflation. There's just a lot of things going on under the hood. Russia, Ukraine dumped fuel on the fire, so to speak. So if you look at this chart, guys, you can see that the only time consumer sentiment was this low was during 2011 bear market. That was August through September 2011. You can kind of see that red line there. So sentiment can always get a little bit worse. You can see back here, we've got 1980 recession. This is 2008, 2009. It didn't even get that bad, it looks like, in the 2000 range. So, this is consumer sentiment. So basically how the consumer feels about spending money, about the future, what's going to happen. So nice to see you back here. I'm going to try doing these every Saturday. I will tell you that next week I'm going to try. The weekend after that is going to be my 19th wedding anniversary, 19th year, if you can believe that. I've been married that long. We've been married since we were pretty young. And I will be taking a little vacation with my wife, going out to Deadwood. I don't know if you guys have been to Deadwood, South Dakota. So that's where we'll be in a couple weeks. But I want to go through a couple of these different tweets. I'll get to your questions, guys, here in a little bit. I want to go through and recap some of this, and I'll kind of go in increments. So I'm going to do some general news here, and I'll take some questions later towards the end. I want to talk about Upstart. I want to talk about Roblox, talk about Unity. So stay tuned for everything here. We're going to be here for at least 90 minutes. Last time it was 2 hours. This is recorded, so you can come back and watch it as many times as you want. So the next one I wanted to cover with you guys, this is also Charlie. S&P 500, worst performance through 91 trading days. This is 1928 to 2022 to present. The only year that was worse in the first 91 trading days would have been 1932. We're talking Great Depression era. So we've got -7, and this is the S&P 500. The NASDAQ has been crushed even worse, 30% plus. The S&P 500 down 17.5%. And we've got question mark for year-to-date returns. So day 92 to year end, 19.3% back in 1932. But then the full price return for the full year was still negative 14.8%. So it'll be interesting to see how this plays out. Of course, you're going to have bears and bulls. We had a bounce on Friday. I'm going to talk about why that happened here in a couple of minutes. Questions just keep rolling in, so I appreciate you guys. I can see on both sides. I've got 3 monitors here. Do you think the market will go down further? I knew I was going to get that question. We'll get to it. So stay patient here. We're going to go through it. I first want to cover things methodically from the news, and we'll kind of get into that question part later. And I'll give you the best answers I can. I'm not a financial advisor, but I'll do my best to help. I've been investing over 25 years and managed multi-million-dollar portfolio between my individual taxable brokerage as well as retirement accounts. So looks like we've got, let me switch over here from Twitter. There's a lot of good information I could go through on Twitter, but I don't want to bore you to death. So here's what happened on Friday. We had the NASDAQ bounce 3.82%. Now that actually was up over 4%, got faded maybe 2-3 hours before market close, and then it kind of actually closed stronger. It was actually up over 4% in the last 40 minutes of trading, and then it dipped down to 3.82, but pretty solid close. A lot of people thought that would get faded completely. I think what's interesting about that is 401ks, all the money goes in on Friday, and then they'll probably just rug pull it all on Monday, right? We'll see what happens. With me personally, I think that we have more volatility, of course. I'll get to some charts here and I'll explain what I think is going to happen moving from here. But to kind of explain how we got to this point, first of all, we were completely oversold. So a lot of times if you have bear markets, you're going to have basically, they call it dead cat bounce, where it's just like so oversold that buyers come in. Once buyers come in, shorts have to cover, you get short squeezes. We saw a lot of short squeezes, people covering shorts on Friday, and some of those stocks were rocketing 20-30%. We even have bears that came into the market on Friday that were just looking for a quick trade. So we know that some of this is going to get faded. The question is, do we have some sort of floor where we might trade in a range, or are we going to go, some people doom and gloom think we're going to go, 5 legs lower, and that this is going to be this multi-year secular bear market. And it could be, consumer sentiment's really bad, inflation's still bad. So what happened is we had inflation read over the last several days here, I think it was the 11th, and inflation's still at 40-year highs. It was lower than it was in March, but it was actually higher than expected. And under the hood, when you look at the core inflation, the data wasn't all that great, okay? So you got food prices, energy prices, all those prices are still pretty expensive. And that's impacting consumer sentiment because people are getting squeezed. Mortgage rates are high compared to what they've been the last few years. And so if you're buying a new house, that's going to squeeze your disposable income. If you're a renter, a lot of landlords are increasing rent. That's going to squeeze your disposable income. We talked about this last Saturday. The U.S. economy is driven by the consumer. If the consumer doesn't have disposable income, it's hard for the consumer to spend money, and we need consumers spending money for our economy to grow. For the most part, we are very consumer driven in the U.S. when you think of our GDP and our economy. So we had essentially this bounce, and one of the catalysts to the bounce, of course, the fear and greed index was at a 6. So it can go to a 0. I think it got to a 0 or 1 back in March 2020 during the pandemic lows. So it could always go lower. So we had that. We had oversold. A lot of the RSIs were completely flushed out. People just, it was insane. Just every day down, 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 down. Since the last time we talked, it was an awful week. We had a nice Friday, but celebrate small wins, but don't get too excited, kind of a thing. What really happened is we had Powell come out, and we had Powell at the same time, which you have to kind of scratch your head sometimes and say, is this a coincidence or not? It's like the technical levels were there where we were just about 20% on the S&P 500, and we were at 30% on the NASDAQ, and all of a sudden we get Powell come out. And so Powell was nominated for another 4-year term. He got in. It was like 80-16. It was pretty heavily voted on his favor. Powell came out and said he can't guarantee a soft landing as the Fed looks to control inflation. Okay. And so we got some quotes here. Nonetheless, we think there are pathways for us to get there. He said in an interview, and I'm going to go through this. This is from CNBC. So he said Thursday. So this is Thursday, of course. And then Friday we had the rip. This was definitely one of the catalysts. Of course, technical bounces. There's other things going on here, but this was pretty important. So Powell said he couldn't promise a so-called soft landing. That just means that, the stock market doesn't get destroyed and there's not a lot of economic damage. We're trying to get a soft landing. The reality is the Fed is in a position where they probably can't have a soft landing because they're either going to have to they're so behind the curve, they're going to have to jack the rates up really hard, which is going to spook the markets. But some people actually think it'd be better just to do that, pull the Band-Aid off and get it done. So what happened was when we had CPI data, before that, when the Fed FOMC announced interest rates, they essentially announced interest rates and said that we were only going to do 50 basis points the next 2 meetings. And at first that was a very dovish thing. The market bounced 3% that day. Then people started looking at it under the hood and saying, well, wait a minute, what happens if inflation keeps running wild? And they just basically pigeonholed themselves. They can't, they don't want to backtrack and go against what they just said. And now they're putting themselves in a bad spot. Why not wait for the data and react to the data versus, promising? So it's almost like they were trying to be dovish to help support the market in a way. And they're going to tell you that they're independent. They wouldn't do that, but it felt like that to me. And then we had the CPI come out, and the CPI, of course, was, worse than expected, and we had another flush. And then Powell comes out Thursday and says, so a soft landing is really just getting back to 2% inflation while keeping the labor market strong. It's quite challenging to accomplish that right now for several reasons. He noted that with a tight labor market pushing up wages, this is another problem, guys. You've got this really tight labor market. A lot of people aren't coming back into the labor market, so there's a lot of jobs. Unemployment's pretty low, and people are demanding more money. Inflation's going higher, so people are going to their bosses and saying, hey, inflation's high. I've been working here for X amount of years. I need a raise. And that's just, it's causing more problems on top of it. It's just this whole snowball effect of all these things working together. So it'll be challenging. Quotes, it won't be easy. No one here thinks that it'll be easy, he said. Nonetheless, we think there are pathways for us to get there. And there's a couple other quotes in here basically talking about how our goal, of course, is to get inflation back down to 2% without having the economy go into recession. It might be too late for that. We talked about it in the beginning. Or put it this way, with the labor market remaining fairly strong, that's what we're trying to achieve. I think the one thing we really cannot do is fail to restore price stability, though. Nothing in the economy works. So basically what he's saying here is that inflation can cause more long-term damage than just the market selling off and just jacking up rates to basically combat inflation. And so they have a tough spot. No matter what they do, it's kind of a lose-lose. And it's like the market's either going to react short-term or long-term, and the market's forward-looking. So the market's thinking long-term, thinking we're going into this massive, recession. And earnings are coming out. A lot of businesses are doing very well, but some businesses are coming out and they're actually, they're lowering guidance, and they're telling us there's still supply chain issues. We know that supply chain issues in semiconductors is going to linger for some time. And, a lot of supply chain issues are going to push into 2023. So that's kind of where we're at, guys. And we've got a lot of questions still coming in. Before I get to some questions, let me first cover a couple quick things. I won't go into too much detail. Elon Musk here, so he can't walk away from his Twitter deal without paying a $1 billion breakup fee. Basically coming in, he wants to assure the quality, that there's not too many fake accounts and bots. And it's probably a negotiating tactic because Tesla share prices, he's got to basically sell Tesla shares, buy Twitter shares, and the Twitter stock price has dropped with the rest of the market. It's held up better than a lot of names, but it's dropped to the market. So he's probably using this as a negotiation tactic to try to get maybe a little bit better price, most would argue. You probably already know the story, so I won't go into it too much. The other thing that I thought was interesting is Bezos, so Amazon's Bezos, criticizes Biden over inflation tweet. And so Biden was basically talking about, he tweeted, you want to bring down inflation, let's make sure that the wealthiest corporations pay their fair share. And this is the response here from Bezos. So he's basically saying the newly created disinformation board should review this tweet, or maybe they need to form this is pretty interesting. Raising corporate taxes is fine to discuss. Taming inflation is critical to discuss. Mushing them together is just misdirection. Basically saying they're two different things and you shouldn't mush them together. So I think I agree with that. Right now inflation's a big deal, and that really should be the focus for us right now. So let me shift gears over to charts here. And I'm just going to show you really quick the QQQ and the SPY. And I'm going to go over some questions. And then as we get into some questions, I've got some documents pulled up for some of these earnings like Roblox and Upstart and things like that. So the QQQ, last time we talked, guys, I said, this is a trend line that it could easily go lower. And we had these different areas circled. 274 is what I've been saying is possibility. 275 on the QQQ. It basically bounced off this 285 number. So it looks kind of algo driven. And if you go back, this is basically August 2020, this blue line here. So we basically bounced off August 2020. The question is that good enough, or do we want to go down to, say, pre-pandemic lows? The next stop, if it breaks this, we've got this circled here. It got into the top half of our circle. The bottom half of the circle is 274. Some people are thinking that doom and gloom, worst case scenario, 235, 237, that's going to take you back to pre-pandemic highs. So this is basically when we had the COVID crash, the pandemic. It went from 237 down to 164. And if you draw a line from that 237 all the way across, well, you get this spot right here. So could that happen? Anything's possible. Does it have to happen? No. But some people are going to tell you that, if it's going to break down from 274, that it's going to come down in here. And it very well could. A lot of times it overshoots. It ran too hot on the upside. It could run too low, so to speak, on the downside, kind of overheated both directions, bear and bull. There's also a good chance that we find some stability here and we trade sideways. One catalyst could take you either direction. A positive catalyst could actually take you the right direction because we have washed out pretty well. There's no rule of thumb that says that it has to go to 50% down or it has to go to 30%. It's really just going to be sentiment, bears versus bulls. There's still more bears than bulls, but at the same time, that sometimes can cause really epic runs. So what could happen, you could see a further bounce from here. You could see a rug pull on Monday. It's really hard to say. But the good news here is we've kind of established ourselves back above this trend line. So last time we talked about this purple trend line and it dipped below that, but now it actually closed Friday. So it dipped really, quickly below that and then kind of came back. And when there is a bottom formed, a lot of times it does that. It has that capitulation. A lot of people will tell you that we didn't have it. And so there's going to be people in here. I've had a lot of clowns that have been coming onto my Twitter feed and YouTube talking all kinds of trash. I just mute them, guys. Like, it's not going to impact me. I don't really care. If the market goes lower, it's an opportunity for me to buy more. And if you want to time the market, go for it. But you saw what happened even like on Friday. Like Snowflake literally was a 20% pop from the bottom intraday to where it closed. And there's some stocks were like 40%. And when everybody's afraid to touch Upstart when it's down at like $30, then, or whatever it got to, we'll look at, this is just absolutely, incredible. And we'll talk about more on this one later. But this thing broke through this circle, like completely broke through. I mean, this is just, let me just even get rid of this. This is completely, it broke all the way down here to $24. And now it's trying to recapture the S2. And there's certainly risks with it. I think that their cash balance is $900 billion. They've got $900 million in cash and $700 million in loans on their books. But loans are assets, and we're going to talk more later about what their default rates are and things like that. Let me not get sidetracked. Let me go to SPY. I'm going to talk about SPY, and then I'm going to go to some questions. So the SPY didn't quite, it's basically right in the 20% range. We were saying in Discord, that basically we could get down to, 380, 385, here's 380 on the S3, 385. It pretty much bounced off 385. And then 375 is a possibility. This kind of gets you that, 20% line, I believe. And some people think it has to go lower, SPY 330, SPY this. I mean, there's always going to be that every time. You look at like the pandemic lows. People thought that the Dow was going to go to 15,000. And we did have a catalyst. We had a catalyst because the Fed came in and kind of saved the day. This time, the Fed's not coming to save the day, so there could be a lot more pain. But at the same time, like my favorite companies, and we'll talk about some of those companies later on, so stay tuned. My favorite companies, I'm going to keep accumulating shares. I've trimmed some of my lower conviction stuff, and I'm building the best portfolio that I possibly can build for my time horizon, which is 2030. I'm going to stop there, guys, and say if you have not subscribed to the channel, please do. And then click that bell to get notifications. So when I go live, you're going to get a notification. Also, click the like button on this video. That helps me out, helps the algorithm. So I appreciate that very much. I'm going to switch over to some questions. While I do that, I'm going to have my top 15 investing rules up on the right-hand side of the screen so you can read those and keep yourself entertained and busy while I kind of read through some of these questions. So let me scroll up, guys. Hope you guys are doing well. Happy Saturday, happy weekend. Hope you guys are feeling great. Caleb, thanks again for the $10 tip. I really appreciate that a lot. Sounds great. Love these live shows. Thank you, Cloud Developer. Robert Prescott, woohoo, it's Saturday. Nice to see you back here. Thanks for coming. This is a bottom. Some people think it could be, and I think that there's a chance. I can't be the guy to come onto YouTube on a Saturday morning and say, hey guys, the bottom's in, go buy everything on Monday, and then, basically get the rug pulled, and then you blame me for it. So these are the possibilities. This is what's great about what I do. I long-term invest. And these are the possibilities. I've got cash, okay? And I've got a plan. So if it gets lower, I've got things like Avi. Avi is not going to tank. Avi is going to hold up in that $140 to $150 price range, even if the whole market rolls over. So I can sell Avi, which is it's all profit. And this is why I develop portfolios the way I do, because I've got options. So I've already trimmed about 1% Avi. It was 5% of the portfolio. I can keep trimming Avi, and there's other things like lower conviction stuff that I can get rid of. Plus I have cash. I've got actually almost 2% cash even after all of this, and I can continue to buy. So if this comes down in 2% cash, I mean, you're talking $30,000. You know, it's a decent sized portfolio still, and it's come back a lot, but you know, it's still a good sized portfolio, and it's had some damage, of course, because I've had some growth stocks and things like that have been hit pretty hard. But overall, you know, I've been investing so long that there's so much profit in it. And that's where you guys are going to get too. You just have to invest in the long game, make sure you have conviction, and you don't have to be scared. Like, I'm not afraid if Snowflake goes to $100. I'm just going to buy more of it. Not financial advice. You got to do what's best for you. But that's what I'm going to do. So if this wants to come lower, great. I'll just buy some more. And eventually you will run out of money. But I tell you that if I'm doing it strategically and buying these levels, you know, could it go lower than 237? Yeah, the bottom could always be zero. You know, but I've said this before. If that happens and we get to the point where, you know, the U.S. stock market doesn't exist, we've got bigger problems. We've got apocalyptic events going on. So that's the way I look at it, guys. Do you think the market will down further? I just kind of helped answer that. Hopefully, it's very possible, and you have to be as an investor. You have to know what the possibilities are. But if you're buying levels, you know, so I'll give you an example. All right, Snowflake is one that I have a lot of conviction in. You might not like it, and you might think it's too expensive. I don't care what you think. I'm just telling you what I think. Okay. 132 to 150 is very possible. When did I tell you guys this? What was this? 2 weeks ago in chart day? We have chart day every Wednesday, Patreon Discord. You can see up the top, patreon.com. Check it out. There's different tiers. Go check it out. And there's different tiers for different price levels. Join us. Elite and above, you're going to be able to join for live streams Monday, Wednesday, and Friday, like we're doing right now, but not on YouTube. And I'm a little bit more candid, I guess, on those live streams. And I do some that aren't recorded where I'm even more candid, right? So, you know, you look at 132 to 150, very possible on breakdown, I said, okay? I said when we started buying this, I said 225 or less, preferably under 200, and I won't be surprised if it gets to 150. This was literally a year ago because it was expensive, and I knew it was expensive, and I knew that there was a chance that could happen. So my cost basis on this stock is about 170 bucks, and I've owned it for a long time, and I just keep buying it at levels. So my next level, I bought pretty aggressively in this 130 to 150 range. This is not that hard, guys. And now if it goes lower, this was the S3 at 122, and it literally got down to like 126, damn near touched it. If it wants to go a leg lower, what did I tell you guys? I said 102. Could it go lower than 102? Sure. But I think you're going to start getting institutions it's going to be very attractive. If you look under the hood, this thing has free cash flow. It's got billions of dollars of cash, and it's not going anywhere. I mean, even if the economy slows down, this type of company is a B2B company, and it's relying on its database as a service, consumption-based, and analytics are not going anywhere. Data is not going anywhere. In fact, you could argue that in tough times, you might even use the data more to make yourself more efficient, right? So, and the other thing too, when we talk about, this isn't necessarily SaaS. We talk about the Datadogs and, you know, the Cloudflares and it's recurring revenue with high margins, you know, 80% margins, sometimes higher. And you've got built-in, in the contracts, you got built-in inflation. So every year when the customer renews, it's going to have like a 3% inflation. It's not going to cover the full 7 or 8%, but it's better. They have a lot more pricing power. And companies aren't going to just rip and replace, like, oh, okay, well, the economy is doing bad. I'm just going to cancel my Datadog. I don't need that anymore. Or I'm going to cancel all my cybersecurity. So Zscaler, Cloudflare, and CrowdStrike, I'm just going to get rid of those because, you know, cybersecurity is not going to be a threat anymore once the economy is bad. If anything, if we go into a recession, cybersecurity is worse because times get hard and people do dumb stuff, right? So, you know, I've got people on Twitter. Someone said last night, let me just take this off so you can see the top of the screen. Sorry, guys. Last night, and I'll take this off too. I'm trying to show you a damn chart. Here we go. The investing rules are up there. Let me just show you this real quick again. Sorry about that. I'm still learning this damn Stream Deck, so you have to just bear with me. So what I was trying to show you guys, though, this is Snowflake's chart. You can see it's in a down wedge. It could certainly go lower. The S3 right here is 121, you know, in that range. I said 132 to 150 possible. It went lower. It went to 126. And I think it's possible it goes to like $102, you know? So this is the chart. Sorry that I was blocking that. I'll get better at that as we go forward. Let me see if I can get a logo up there. That would be cool. All right. Thanks, guys, for sticking with me here. Good afternoon from the Netherlands. Hello, bottom. Congratulations on your 19th wedding anniversary. Thank you. I'm 90 minutes from Deadwood. Awesome. Good afternoon from the UK. Hello. Love the chat. Thank you for being here, James. Anil, good morning. Hello. Drew, good morning. I can't stay to watch the whole thing. Full video. Yeah, have a good weekend. We got some platinum members in here. Good to see you guys. Drew is one, and there's several others. Alex Nelson, do you think Friday is a bear market rally? It could be. It could be a dead cat bounce or a bear market rally, a bull trap, all those different things. Do you think SaaS settle? I kind of just explained Snowflake, and let me go through Datadog and Cloudflare. So Datadog had a really good quarter, and I'm typing in the wrong keyboard because I've got two keyboards. Oh man. So Datadog, you can see the screen now, right guys? So yeah, sorry I was hiding the screen with the top 50 investors. You're like, I can't see. And of course I can't read everything and do all this, but we're learning here. So I'll get better at these. This is the second one I've done. So triangle top, we called back on chart day, and I had this literally saying it could go down below $100, and it did, and very briefly, and it rallied. Now, what you'll see is this stock closed at 108. It has a lot of strength. The earnings were really strong. Now, one thing I'll say, I'll show you some of the valuations on this. So Snowflake right now, guys, is trading at about a 30, actually it's a 24.5 now, if I'm using, so the EV implied ARR is 34.6x, but you probably don't care about that. So the EV NTM revenue multiple on Snowflake is 24.5x. So still pretty expensive. Cloudflare is about a 21.2. Datadog's a 20.7. Zscaler is a 19.7. Sentinel-1 17.5 and CrowdStrike 17.3. So Snowflake is still the most expensive of that group. I think that it probably should be. I think if I were going to buy one for me personally, it probably is Snowflake. Beth Kindig made a comparison to AWS in the same time period. It was pretty interesting on Twitter, and I can't remember the exact stats, but I could definitely see. I don't necessarily think that Snowflake's going to be the next AWS in size because that's pretty massive growth. But I could see Snowflake being a 10x type stock over the next decade. And it's not a guarantee. I mean, I could be wrong and the company could go out of business, but it's one I have high conviction in. So if I look at this, I call the triangle top in chart day. It played out pretty damn well. I mean, I don't know if I can do a lot better than I've done on some of these guys. Like it literally, bounced off this S3 $91 that we called. And, could this thing go lower? Yeah, because, Datadog is I got my notes over here. I've got 20.7 EV NTM. But what's really interesting, if you look at some of the other metrics on here, it's just such a good stock, though. There's so many of these that are. But yeah, I mean, expensive. It's expensive. And you look back historically, the median software multiple is doing pretty good, but these specific stocks that we're talking about, these trade at higher premiums, but probably for good reason. So Datadog, would I be surprised if it came down to $75 and retested this range again? It could happen, but I'm telling you, every time it dips, people want to buy it. So it depends on how bad the market gets. I don't have a crystal ball, but I'll tell you that this one had great earnings. AMD and Datadog had really strong earnings, and it's been holding up pretty well. Cloudflare at this price, definitely when it got in the 50s, I think is attractive. We bought this like $35 in Discord. Most of us were selling it closer to 200, trimming some of it. And I do have like 300 house shares on this, which, have come back a lot from the top, but they're house shares, and I'm just kind of holding those. And I think longer term, it'll get back into these price levels. We talked last time about how, if you bought it at $100 and it dropped to $60, $70, you buy more. And, 4 years from now, maybe it's back to all-time highs. Maybe it's not, but you're going to outperform the market if it ever does. Now, some people are in the camp that this is like the next .com bubble and that 20 years later, they're going to be at the same valuation. If you think that, then don't buy the stock. I mean, not everybody understands these. Not everybody is going to have conviction in them. Just because a lot of people think they're hyper growth stocks, it doesn't mean they have to be successful. I believe in these SaaS companies, but I worked in that space. So if you're not familiar with my background, and I worked in that space for about 10 years, and I have a lot of conviction. Semiconductors and software, especially SaaS. So, okay. Upstart earnings, we'll get there. Wow, I'm going to lose my voice again, guys. I appreciate all this. So Confluent and Elastic look really good down at these levels. They're not bad, but you'd be surprised. Confluent, for example, if I look at some of the metrics on Confluent, it is trading at a much lower multiple. It's trading right now at a 11.2. Now, most people will tell you that the best of class shouldn't be more than 10, right? And so you look at that and say, well, they are burning cash still. They don't have that free cash flow. It's tough with Confluent. I like it long term. I think it'll be fine. If I was going to pick my top list in this environment, it's probably not going to be as good as some other ones just in this type of environment. I'm going to go through some of these other numbers here too. So rule of 40, the rule of 40 on Snowflake 109, Cloudflare is only 41. So that's why it's not my highest conviction on these guys. Snowflake, Datadog, and then Zscaler, probably in that order, and then maybe CrowdStrike, and then maybe Cloudflare. And there's some other ones that I want to do more work on, like Bill.com. Not financial advice. Don't go buy stocks just because I'm telling you I like them. I'm just telling you my opinions, right? But if I look at Confluent right now, the rule of 40 on it's a 35. Now that's actually bad. You want it to be 40 or more. You know that, right? And if you look at the some of the things like free cash flow, it's negative 33%. That is not what you want in this market. The only other one that's worse than that is SentinelOne's burning at negative 48% free cash flow. Those are going to be in the doghouse in the penalty box for much longer. Now, Snowflake actually has 8% free cash flow, Cloudflare negative 12. Datadog's at 30% free cash flow, and Zscaler is 24%. CrowdStrike's 32%. So you look at CrowdStrike, 32% free cash flow versus negative 48% for Zscaler, or for SentinelOne, sorry. So if I'm comparing SentinelOne and CrowdStrike, CrowdStrike's 32% positive free cash flow, and SentinelOne is negative 48%. Okay, rule of 40. Now you would think SentinelOne would be higher, but it's not. It's a 75 because of that cash burn. And what's interesting is CrowdStrike's actually at 97. So CrowdStrike is a better stock, especially in this environment, even at these levels, in my opinion, based on those stats. Okay, and that's how venture capitalists. That's how they're judging these type of high performance SaaS stocks. And there could be a lot more pain in these companies, guys. So understand that these aren't bulletproof, and they could go lower. They're in demand, but if enough sentiment gets bad where people start just selling their favorite stocks, people talk about true capitulation as when the mega bulls are selling their favorite stocks. Like, for me, that's never going to happen. Like, there's not a point where it can go on a chart where I'm going to start selling some of these stocks that I believe in long term, because my horizon is 2030, and I'm just going to keep buying. Okay. Woo! Hope these help, guys. I do my best. This is all live, impromptu, just off the top of my head. I'm doing my best here, so hopefully it's helpful. What else here? So how about NVIDIA at these levels? I think it's good. Let me just pull up NVIDIA. You guys can see the chart, right? Yeah. So NVIDIA, it's back to basically the split level. So this is the split back here. Let me just make sure you can see this chart. $154 is what I got to. NVIDIA under $150 is pretty good if it gets back in that range, and it could. But you can see buyers came in really fast. This is going back to the May of 2021 split. And so, it came in 161 is what I thought would be the low. It actually broke that and went to 154. If there's no negative catalysts and we start getting good news, you might see some of this stuff recover a little bit. But S3 is 121. Is that possible? Yeah, it is. I can't sit here and tell you that I know with certainty it's at the bottom, because I can't predict the future. And one catalyst, like Russia could do something stupid, the whole market's going to go a leg lower. It's so vulnerable right here that anything at all can make it go lower. Anything. And at the same time, one positive catalyst, it's vulnerable to where it's oversold quite a bit, where it could go the other way and bounce too. So people are trying to time the bottom off technicals. I think that from a technical level, we've accomplished enough where we could actually go higher, but it won't take much at all for that to not matter at all. And so what I'm saying is technicals at this point, the fundamentals are going to trump the technicals, and they always do, but especially here because we've accomplished that, that washout with a lot of this stuff. And some people disagree and say, the QQQ is still expensive and it's got to go down to those pre-pandemic levels. To me, I look at the amount of growth those companies have had, and yeah, I understand quantitative tightening will impact things. I understand interest rates and inflation impact things, but at a certain point, there's got to be investors too. So, this is a flip of a coin type of situation, a jump ball. And I won't be surprised if we go lower, and I won't be surprised if we don't. And to me, it doesn't matter. And if you've got the right mindset and you've got that psychology, it doesn't matter. If you're in this game to 2030 and you have confidence in the US economy and the global economy and in the companies that you're buying, you shouldn't worry too much about it. You can look at it as an opportunity to accumulate shares. That's how I look at it. And I'm down a lot more than probably most people that are on this video, and I'm fine. I mean, it sucks, but at the same time, I know the outcome. I'm gonna have more money in 2030 because of this than I would have if it never would have happened. And that's the silver lining of it. And you just have to understand that and go through some of these to really get it. And I've been through the 2000 .com bubble. I've been to the 2008 crisis, everything in between, the 2020 pandemic, where I lost, $400,000 in 2 weeks or something on my portfolio, and then had it back 3 months later. I was up, 100%. And at the highs, I was up 300% or something from the bottom. It's just crazy. That whole period was crazy. Wall Street's trying to erase it from the history books. All right. So what's your opinion on leaps for 2024? Don't really play with leaps, so I'm not really the best guy to talk. I'm not much of an options guy. Usually cash covered calls. I'm much more of just a long-term investor. Leaps, if you, I don't know what the premiums and things are right now, but I know with cash covered calls, the premiums are trash. So it's kind of a tough call there. If you have several stocks in the red, but you have conviction for 2030, what do you do? I'm holding. I have stocks that are red. I'm holding on to them, and I'm adding them at levels. And at a certain point, if I put too much into it, I don't let it get overweight in the portfolio. I use cost basis. So if it gets to a certain level, 2-3% of the portfolio, and I don't want to go more than that, I just let it sit. And I'll reassess it every quarter, make sure I'm paying attention to it, watching the earnings, and I can always tax harvest later in the year if I need to. So right now, I've got lots of flexibility with that. I have eliminated some smaller positions, and some positions I had less conviction in. And a lot of it's just, I've only got a $5,000 position. It's not really going to do much either direction. It's like, I need the cash. I just sell it. And pretty much all of them were for gains, because most of them, I had for a long time. They were dividend stocks, things like that. So let's keep going on some of these questions. So if you had 50K to deploy across names for the next 20 years, I hate questions like that. Will we see November 2021 highs in the next year or two for FANG, NVIDIA, or Netflix? I have no idea. I don't have a crystal ball, Allie. If I did, I'd be a trillionaire. So, you have to be realistic with these questions. You're asking me to be a fortune teller, and you're giving me a time frame of, so you're asking, will we see November 2021 the next year or two? Maybe, good chance, maybe not, right? I'm not here to be a fortune teller, buddy, and I don't want to come off the wrong way. But with these questions, if you give me a question that I can answer, I'm going to give you an answer. But if I don't, I'm going to tell you either way, because I'm putting my reputation on the line. I'm not a psychic. I'm here to tell you how investors make money. And if you're looking for trading advice, I'm the wrong guy, and I apologize. It's just I can't be all things to all people. So, but I do appreciate the question. And don't misconstrue it. But I also want to push back a little bit on some of those questions, because, I can't predict the future, and I can't tell you Netflix is going to go to all-time highs on, July 31st, 2023, or these 5 stocks are going to perform the best. I've got 60 stocks. Some of them are going to work out. Some of them aren't. And I don't have to be right every time. Just that whole Peter Lynch thing. If 6 out of 10 of his stocks do well, he's outperforming the market. And you're going to be wrong on some stocks. So I'm playing a very different, game is the wrong word, but as a long-term investor, there's not many of us left. Everybody wants to try to time the market, and they want to it's going to go lower. I'm going to sell here and buy here. None of that matters. All that matters for me is the company sound? Is the stock broken, or is the company broken? If the stock is broken, I need to sell it. If the company's doing well, and it's just let me back up, because I can't remember what I said. If the company's broken, I need to sell it. If the stock is broken and not the company, if this is stock price, well, then there's no reason for me to sell it. I just hold it. And yeah, it's easy to say, I shoulda, woulda, coulda bought it at a lower price. I should have done this. That's not going to help you. You can't change the past. You can only change tomorrow and the next day. And if you can't accept that, then you just sell and get out of the market. And if it causes too much stress for you, then just alleviate the stress by getting rid of it. And I'm not telling you to panic sell. I'm not a financial advisor. I can't tell you what to do, but I'm just saying, like, if you're losing sleep over it at night, then you have to question, like, is this what you want to do? And you have to ask yourself the question, why did you buy the stock in the first place? This is the biggest thing that people screw up, is they don't have a plan. They don't have a blueprint. And this is what I try to teach in the masterclass, is I try to teach a blueprint to say, hey, you got some ETFs. That's your foundation of the house. You've heard me say this before. You've got some dividend stocks. If you had that kind of portfolio, it holds up a lot better. And now you've got options and you've got a little bit more stability. If you just have 10 spec stocks, you're absolutely crushed. And you're wondering, like, why did I buy this stock in the first place? Why didn't I do this? Why didn't I do that? And that's the tricky part. When everything's running hot, you just buy a stock because you think it's going to go up, but you don't really know the business. You don't have conviction in the business. You don't have a plan. You don't have a time horizon. You don't have a blueprint. And without that stuff, as an investor, you're kind of screwed. So I would recommend getting that. All right. So thoughts on Trade Desk. I like Trade Desk. Do you sell covered calls? The premiums are really bad. So, you can, but the premiums are awful. Thoughts on MDB? I think it's good, but it's too expensive for the growth here. I did buy that back in 2017 or 2018. And, it's good. They're crushing it, but for the growth versus the cost, there's the other ones we talked about earlier, I think would be higher on my conviction list personally. What else? So Elastic we covered. Elastic's okay, but there's other ones. I would buy Datadog over Elastic. That's just me. Do you look at margin of safety before buying these? Most of the stocks like Fastly, PayPal were hyped. Yeah, Fastly I bought at 18, sold at 110, and then I used the proceeds and bought Cloudflare. But comparing Fastly and Cloudflare, they're not even the same business. Like Zero Trust. Definitely do some homework on those. Margin of safety. Of course you're going to have margin of safety, but I wasn't buying any of those stocks at the highs either. I was buying them at the lows and selling them at the highs, buying Cloudflare 35 on profit, selling at 110. There's not, the only ones I got hurt on, the only ones I'm really hurt on are going to be the IPOs, like those IPOs, like the Confluence and the Upstarts and the Robloxes. I'm crushed on those like you guys are. But the way I build my portfolio, they're like 1% positions and they're not really the end of the world. If you have this is why you don't have 20% positions in like Upstart, because now you're just absolutely buried. Even if you bought it $100 a share, you're just crushed. And that's why I teach portfolio management. Again, masterclass. If you guys want to check that out, go check out the top there. There's patreon.com. And sign up for the platinum tier. There's 12 hours of content, it's 11 and a half hours of content, 12 videos from A to Z investing. You could literally go sign up right now. You could watch all 12 hours or 11 and a half hours over the weekend, and you could, cancel at the end of the month. And you just got, 350 hours of my time putting into that series for $75, So that kind of tuition, if you could get tuition that cheap at a university or college, we wouldn't have as many problems in the United States as we do. What are your thoughts on C? It's placed in the Asia ADR China bucket, and so it's in the dog house. It was really expensive. A lot of people actually put it in the meme stock bucket. I still own some of it. It's always been spec in a small position, and I think longer term it'll probably be okay. But it's not probably gonna recover to all-time highs for a very long time, would be my guess. Google, Amazon splits before after buys. If you take a pizza and you cut it into 20 slices, you still have one pizza. So it shouldn't make the price matter. You own the same amount, but generally retail is going to flood into it around that time of the split. Traders are going to pump it up. And then, a lot of times, look at your screen right now. This is NVIDIA. This is the split right here. And you can see it just rallied from that split, and the metaverse craze, all that was in here. This was the top up here, 350. I bought NVIDIA at like $35, like way back, 2017, 2018, whatever it was. But yeah, if you like the companies, you're buying some here and you're dollar cost averaging. So I always, if you want 10 grand in a company, you probably buy a little bit, you might buy 5 lots of $2,000. At these levels, it's up to you, but maybe you buy 3 lots or 4 lots, you buy $3,300 3 times or something. It's totally up to you. But you have to really buy at levels. You have to realize you're never going to predict the future, right? You're not going to be right every time. And if you're going to win the game, you have to play the long game against Wall Street and their algorithms. And if you're going to trade, then, this isn't the channel, because I do some trading too, but it's completely different. Like right now we're looking at a 1-year chart with daily candles. If I'm trading, I'm looking at a 2-day chart with 5-minute candles, and it's a completely different thing. You're in and out. This is like, hey, what's the core foundation of this business? What are the fundamentals? Is NVIDIA going to grow over the next 5 and 10 years based on all these secular tailwinds like robotics and AI and, just on and on and on. You think of data center, cloud computing, metaverse. I mean, there's a million things. The new oil is what I call it. There's a whole video series you can check out on the channel called The New Oil. So go check that out. If you have not subscribed, please subscribe. Click the bell to get notifications. Click the like button if this is helpful, guys. And I do appreciate it very much. I'm going to put up the top 15 investing rules again so you can read those while I'm going through this. I want to remind you guys of no FOMO. So, when you think of chasing, just be careful of chasing. So no FOMO. When you see some of these stocks up 35% Friday, I know it's hard to not be like, well, what if it goes higher? I'm going to buy some. Be careful of FOMO, no FOMO, all right? Or this might happen to you. The Grim Reaper might come if you do something stupid. All right, so I've got some more questions here. What did you say about SPY next week? SPY next week, it just depends. What I said was go back and rewind, watch the video. It's going to be recorded because I want to get through all these questions, but I have covered my thoughts on SPY, and I think I covered it pretty thoroughly. If I get started, it'll be a 10-minute explanation, and the people that caught that part, they're going to be bored listening to it again. What's up, clowning around? I notice when some companies aren't reaching targeted production figures and making losses, when they start coming closer and closer, profit production line, their stocks go up. Absolutely, that's when you want to buy them. Do you think beginners should invest in individual stocks or index funds? Well, if you follow Fired Up Wealth, we actually teach index funds as part of a portfolio. So you could do a little of both. But generally you want to build a foundation of some kind of ETF, like a S&P 500, the NASDAQ 100. There's thematic ETFs that you can use for spec and things like that. But like when I teach, I've got a whole series in the channel that is how to build a growth portfolio from scratch. And essentially what that does is it shows you like how to build it. And it's based on like a young investor, 25, 30, 35-year-old investor that has lots of time, buying some ETFs percentage-wise, buying some dividends, buying some growth, buying some spec, and how to dollar cost into that. And that portfolio is actually doing pretty well. I mean, it is down, but it's doing actually pretty well, all things considering, because we've been buying as it's been going lower. So Upstart we'll talk about more. Buy Upstart now. Keep the questions going, guys. AMC and Redbox, I mean, AMC is not something I follow, so I'm not sure on that. What do you think about Disney? About to load up very soon. It's pretty crazy. Disney's trading at, 2017 prices or something like that. Let's just see. So right now, it's back to, you could have bought $100 range like back in, oh my goodness. I'm not sure if there was a split in here or not. But this goes back all the way to, I'll show you here. I'm taking it off so you can see. So this is Disney. This goes all the way back to 106. This is May of 2016. This is April 2015. There's probably a split in there or something, but the stock is underperformed immensely. And I do actually own some of this. It's $107 now. It actually got down to $99.84. So $100 floor seems realistic for this kind of company. I know that they want to kind of peg streaming to it, and they want to basically, use that streaming data as Disney Plus. But you got to remember the parks. The parks, if we get the reopen trade. Now, if we go into recession, I suppose the argument is in a recession, no one's going to go spend thousands of dollars on Disney World. So that's part of the reason, too, that the stock is down. But if you're thinking long-term on the other side of recession and inflation and all those things, it's probably a decent opportunity, especially below $100. But again, I'm not a financial advisor, so I can't tell you what to buy or sell. Is Twitter deal hurting Tesla? I mean, I think, I said this on Friday, but the generals are always shot last, so to speak, right? So, Tesla is just one of those leaders. You think of, NVIDIA, Tesla, Apple. they all have to get flushed out. So I told the gang that this was going to break $700, and I put in an order to buy more. My order missed by $1.90, unfortunately, and it was like 10 or 15 shares, and I missed by $1.90. So that's tough, but maybe we'll get another opportunity. It's hard to know, and it could be impacting the price. It's hard to say, but it's not surprising to see it get sold off because everything had to come down. Even Apple, which is like the market leader that really has been bulletproof. That thing got crushed and got down to 138 and then just snapped all the way back to 147. This was a hell of an opportunity probably at 138. And could it go lower? Sure. But anytime Apple is breaking down here, I mean, this is, if you can accumulate shares of Apple, especially if we got lower in this range, I would think that long-term you'd probably be pretty happy. Now, some people will say that this trade's too expensive based on historic metrics. But here's the thing. Here's my argument to that. That might be true, but it used to be looked at as a consumer products good, basically like phones. Like it's just like everybody had to own a phone. They didn't have the services, the recurring model. And you think of Apple Plus, Apple TV Plus, with Apple Arcade, Apple Health. So those recurring, revenue streams and those subscription models and things like that, that should give it more of a premium. Plus it has a tremendous balance sheet, right? And it pays a nice dividend. And plus Warren Buffett owns it. If Warren Buffett starts selling Apple, then you're going to have problems, kind of a thing, right? So Upstart, we've had Upstart like 15 times. I'm getting Upstart. SoFi was a buy under $5. Or in $5. It wasn't under $5, but it got down to basically 478. I think I bought some guys I bought some around 5, right? 499 or something like that. I said in Discord, if it gets under 5, it's probably an opportunity. So if you listen to, again, I can't give financial advice, but if you listen to that or follow that and you bought it at $5, it's already 675 and you did all right. Now, a lot of us still own this. I think my cost basis is still like 10 or 12 bucks. So I'm still down on it. But it was trading under price to book, and it's still around price to book even at these levels. So I like SoFi long term. It's not the environment for it, and it's kind of put in that meme stock camp. I can't talk. So Peloton, I don't know Peloton, and I can't even comment on it because I don't follow it at all. I used to trade it all the time. We made a ton of money on Peloton last year. Just ridiculous amounts of money. One of the trades was like $10,000, and that was just on shares, not even options, just buying shares. It was crazy. Okay. Yeah, Fastly could get acquired. I don't know about Net. Indie earnings crushed it. I listened to that earnings call. It was a great earnings call. I bought some after hours, I think $5.55 or I don't know, $5 in some sense, and it rallied like 30%. We'll see if it holds up. I don't think it should have been in the 5s personally. And it is a long-term hold. It's spec. And it's like a 2025 plus type play. And, I think it could be a 10X or bust kind of a thing. Again, not financial advice. So don't buy something just because I'm talking about it. Let's go to Upstart because everybody wants to talk about Upstart. Keep the questions coming, guys, because when the questions run out, that's when I turn off the camera. Upstart. So 30, what are we at? 38.13. It got down to 25, 26 bucks. So here's what's going on. I'm going to talk about Upstart. So make sure you guys can see this. I'm going to turn this banner back on. Give me a second. Give me a breather here. First time in 5.5 weeks. Yep. Guilty pleasures, right? So our Upstart's credit underwriting model is still outperforming. This is from Bram, the Motley Fool. If you guys ever want to sign up for Motley Fool, I've got a link in the description below. You can sign up, and I'm basically a contractor for Motley Fool, and of course we get we get kickbacks if you sign up for Motley Fool. So if you ever want to do that, I got a link below. What else? So we've got Upstart believes So Upstart believes that its loan underwriting models can outperform traditional credit scoring models. Okay, so what happened with this is a lot of different things. The big risk that people didn't like from the earnings was essentially, I mentioned it earlier, but $900 million in cash, I think is the number. And this is off the top of my head, so don't quote me. I might be off, but they've got about $700 million, I think, in loans on their balance sheet. Now, loans are technically assets, and the market's saying, like, what if they all default? Well, not all of them are going to default. This article is talking about the default rates. And so Upstart has developed its own proprietary algorithms to better assess the true credit quality of borrowers. So old school methods, if you're not familiar with US credit systems, you basically give your social security number and information to a bank. They pull, there's 3 different credit bureaus, right? There's TransUnion, Experian, and one other one. And they take the middle usually, so they take your FICO score, the middle score of the 3. And that's how they, Fair Isaac FICO score, basically replace that model so that, okay, you've got an 800 score, you've got rock solid credit, I'm going to let you borrow money from me, kind of thing. So what Upstart's trying to do is trying to disrupt that old model. And this model is very old, like 50 years old, very old. It's a bad model. I used to be in banking, mortgages, and real estate for 10 years. And I can tell you from experience that there's lots of mistakes that happen and the model needs to get replaced. So I'm a big fan of something like Upstart to replace that model. And I own this stock and I'm down on it significantly, like a lot of you. Now that I've moved it from growth to spec, because I think it is more speculative because of these risks. Because for one, they do auto loans and consumer loans. If you go into a recession, the demand is going to decrease for those loans. Then you also have this risk of carrying loans on the balance sheet. And, Kramer had him on, and I'll show you that article next, basically saying, you're not a bank, right? You're not a bank, you're a fintech company. Now, what they're trying to say is that they have some of those on their books, essentially to monitor and to break down the analytics of those to help the algorithms, And I don't know if that's true or not. It's hard to say, but this is the big question. Hedge funds and stuff all dumped the stock, and then it was already beat up bad, and then he went on Kramer, the CEO, and Kramer lit him up, and I'll get to that in a second. So Upstart risk grade, if you look at this, they're actually doing better, right? So this chart above shows Upstart's models are doing a good job of quantifying risks. The company grades loans with certain FICO ranges between A+ and E-, with A+ being the best loans to make and E- being the worst. For instance, Upstart's A+ graded loans within the 700+ FICO range have an annualized default rate of 0.6%. Okay, and then it talks about 3.4%, and then it says 7.7% for 639. So even if you add it all together, so even if, say, worst case scenario, they had 10%. So if they got $700 million and 10% default, it's 70. It's significant, but I think what the market's doing is just assuming that all $700 million is just going to go belly up, and I think it's probably an overreaction. But I will say there are more risks to this business now than there were before. But am I going to go dump my shares right now? No, I don't really have enough clarity. So I'm going to continue to monitor. I told the team, I did a write-up, a big, long write-up. If you pay $10 right now and you go to patreon.com, you're going to get a Datadog exclusive video. You're going to get, what did we do before Datadog? The Tremendous 12. On June 1st, we've got an interview with one of our members who basically went from zero to financially free in 10 years. And that's going to be a really good video. So talks about her journey of financial independence in a decade. And it's pretty incredible. It's pretty cool. So, and then we did a Datadog exclusive with a Datadog employee who's he's one of our founding members of Fired Up Wealth. But you'll get access to all 3 of those videos. The last video, the financial independence one, is going to release June 1st. But right now, you can go pay $10. You get access to the entire Fired Up Wealth community portfolio, all our buys and sells, the whole portfolio to know exactly what we're buying and what prices. You would get the Datadog video you can watch right now and the Tremendous 12. And the Tremendous 12 is 90 minutes, and it shows you 10 stocks that could 10x from here. And Upstart was on that list. And that was when Upstart was $75 a share. So now that's half that. I think it easily could it be a $300 billion company if it's $30 billion now or whatever the market cap is? I think the answer is probably yes. I'm going to look that up, see what their market cap is right now because I'm curious. Rest my voice for a second. Upstart right now is it's a $3 billion market cap. Is that right? So 3.2 billion. Yeah. So it's come down a lot. So $3 billion, like 10x, it wouldn't be hard to get 10x at all if I'm reading that right. And forgive me if I'm not because I'm tired, but $38. That thing went from $400 to $38. So the risk reward here for me, could it go to zero? Sure. But especially if I don't own the stock, buying in the 20s and 30s, if you really look at it, guys, it might not be as bad as some people are saying, but understand that there are risks, and maybe all $700 million in loans default, But here's what really drove the stock even lower. So the CEO defends increased loan. So Kramer brought him on and just lit him up. And so all else being equal, I'd prefer if our stock was going up, but the fundamentals of our business have not changed. CEO Gerard said to Kramer. And this thing got down in the 20s, guys. I mean, it got absolutely wrecked. It got down to $22, $24. I mean, I look at that now and I'm like, if it comes back in that range, it's hard to not want to add more shares myself. So look at this. It plunged 56%. So after this interview with Kramer, it absolutely got crushed again. And that's why it went down in the 20s. But he was saying, just to make it clear, first quarter, if you watch this interview, you can go watch this interview. Just go Google like CNBC, Upstart, CEO, Mad Money, Kramer. And I mean, Kramer I'd never seen Kramer light anybody up the way he was. He was like yelling at him, like just saying like, you can't do this. We've said we use putting loans on our balance sheet to test new products and new models. And that's largely what those represented. So he's saying it's no big deal. We've always done this and they're on there so that we can make better products. And I guess if that's true, then it makes a lot of sense, but the market didn't like it. It's not a change in our model, referring to Upstart's use of the balance sheet to support research and development. This is a huge red flag because we're going into this recessionary period, and why do you want to use your balance sheet to be like a bank and hold these loans? More than 90% of our loans are originated and held by banks or originated by banks and sold forward to institutional market. That has not changed. So he's saying that 10% of the loans they hold for research and development. And you can read this, all else being equal, would I ever stock go up? It's going to end up being one of those things where it's going to be a huge opportunity that you missed, or maybe the stock, maybe the company ends up going bankruptcy. But I have a good feeling that Upstart probably is going to do okay. But again, I'm not a financial advisor, and you have to calculate your own risk and make your own decision on what you want to do. The earnings weren't that bad. It wasn't really about the earnings. I think the guidance was maybe a little bit low, but the earnings itself weren't that bad. It was just really about this other drama. And I think that Kramer interview, you got to remember that the fear was at like max level when that happened. And the markets are driven by fear and greed. The market was at maximum fear when he went on Kramer, and Kramer basically asked him questions that he couldn't do a good job. He was very underwhelming with his responses, and it just drove the sentiment and the fear for that stock even more, and it sold off until yesterday when it had that little bit of a pop. Let's see here. Hide user from channel. There we go. Cool. All right. What's up, Connor? IBM is an income stock, it's getting disrupted by a lot of these more modern companies. AMD had a great earnings. You can go check out the channel. I've got several videos of AMD, but I did a post earnings one, and that would be a great video for you to go watch after this. It's about 15 minutes long. Just go to the homepage on Fired Up Wealth, check out like 3 videos ago I did on AMD, and it's really good information, gives you an update. Check that out. Roblox post earnings, we posted that in Patreon, and I kind of talked about it already. I will go real quick and just cover it. So the CEO, this did the opposite effect. The CEO came on Mad Money, and I think it instilled some confidence. This was actually on May 11th. So I think what happened was the CEO came on, and then it took a couple days to digest. And I saw people like hedge funds and stuff coming out saying, oh, well, at this price point, this is really good, blah, blah, blah. And people started buying it. So this interview was actually a lot better than the Upstart interview. And the earnings weren't that bad. We look at after closing bell, it said disappointing first earnings prompted investors to sell. It plunged 10% after hours. It closed Wednesday up nearly 3.4%, had a big run on Friday. Recorded a per share loss of 27 cents. This is the problem, is the market doesn't want anything that's burning cash, that doesn't have positive earnings. It needs to have a PE ratio, and it's still losing 27 cents a share trying to grow. I think this quarter is the first time we've come out and said, look, we're going to nudge a bit towards the efficient frontier on our economy, both around how we do search and discovery, the amazing possibilities for how our brands can bring traffic, and our catalog, which is an enormous amount of activity. One possibility in the future is that Roblox could be used to connect coworkers in an enterprise setting. Someday we'll use Roblox in our own office to stay connected as some of our people work remotely. So we'll see how that works out. I like Roblox. It's a spec, 10x or bust. It's on the Tremendous 12. Again, if you haven't watched that, you can go sign up patreon.com, that $10 tier, and you can watch that video. It's 90 minutes long. It's got 10 stocks in there, and a couple of them you probably never heard of. Good stuff. So check it out. Do you invest in Bitcoin? I bought some in 2017, so I've had it since then long, and it's just part of my spec. And I've got some Ethereum, and I've got some Mana, but very small percentage, like 1% of assets. And, for me, it's a spec. You got to do what's best for you. Everybody's got different risk tolerance and conviction levels and different things. So happy Saturday, Connor. Higher conviction Roblox versus Unity. Answered that as well to the Discord community and Patreon community. Out of the three that I had the most conviction on after earnings would have been Unity, just simply because of the SaaS model, the advertising model. It's going to be an ad titan, I think, with some of these other ones. And I think Snowflake, actually, something that a lot of people don't talk about with Snowflake is the whole advertising part of that business as well, the advertising segment for data analytics. I think that's going to be huge. How do you feel about DigitalOcean? I'm not a fan of DigitalOcean because it has no moat, but that's just me. You got to do what's best for you. Most people are really bullish on it, and I'm one of the very few, especially considering that I love most SaaS companies. That's one I just personally don't have conviction. And everybody's gonna be different. Like, it doesn't mean that I'm right or wrong or that you're right or wrong. It's just like what you believe in, right? Like, some people won't even touch, SaaS companies. Some people won't touch, cryptocurrency. Some people won't buy this or that. I'm just not a fan of it personally. Amazon, 1,800 possible. Why not? Anything's possible. Thoughts on a firm. I'm not a fan of buy now, pay later. That's just my opinion. Of course, I'm trying to teach financial independence and, financial responsibility. And to me, buy now, pay it later is just it's a tricky game that I don't really like supporting. So it's hard for me to invest in companies that I don't really believe in terms of like what they're going after. Again, I'm probably the only one that thinks that. Will the company do well? The stock do well? Probably. And just because I'm not bullish on something, it doesn't mean it can't do well. And I wish you the best, if you own the asset. I'm going to give you honest answers. If you don't want honest answers, I can just tell you what you want to hear, and it won't be that exciting to listen to. Thoughts on Fubu and NOET? I don't follow either one. I apologize. I don't know. Thoughts on Delo, U, and Toast? I like all three of those, pretty speculative. Toast had good earnings. They've got really low margins, only like 18% or 19% margins. So it trades at a lower valuation, like 3 on the EV/NTM. But we did buy some Toast in the community portfolio under 15, and I think it could still go lower. And it's a very small position, just like a starter position. We also own Delo in the community portfolio, and there's, again, you can go sign up right now, and you can go check out that $10 tier, and you can see the whole portfolio and everything. I just posted, I think, yesterday with all the holdings, and I'm going to do a video updating you on the gains and losses and things like that as soon as I can. And I apologize, guys. I didn't get a video out this week. I actually had a really bad week. We had tornadoes come through the area, and I didn't get hit directly by a tornado, but we had 80-mile-an-hour winds that took out a play set that my kids have, which, it's sad because it was pretty expensive, and they're kind of devastated by it. And we had actually a few issues. My refrigerator went out, so there was repairmen all day yesterday trying to fix that. And so every time I was going to do a video, like the power went out one day, we had just one thing after another. So between the markets and everything, it feels like an apocalypse, like around my house. So hopefully it can only get better from here, but I know the markets probably can go lower, and I'm buckling in for the rest of the year for the ride. So concerns me that Upstart still has no insider buying, at least yet. Well, you got to remember in the insider buying, though, that we won't actually get that. It's delayed, so you wouldn't get it instantaneously either. The clown never doubt you. I'm on the same page. This clown never doubt you. I'm on the same page as you. Will Upstart possibly drop again? Yeah, could drop again. Do the opposite of Kramer. Kramer light up the Holmes girl with the blood machines. Oh boy. I know what you're talking about now. Yeah. I can't remember. Holmes, is her name Holmes or something like that? If I forgot her first name. I'm losing my voice. I already covered it for him, yeah. Do you play Mario Party? I do not. My 6-year-old, 7-year-old might. I can ask her for you if you want. Jim Cramer a few days ago called Kathy Wood a kiss of death. I don't listen really at all, so whatever. I mean, he says all kinds of stuff. Retracted message. What's up, Connor? What are your thoughts on SOS? Never heard of it. Buy STEM. STEM will make you rich. Usually when I see comments like that, it's the opposite. So, I mean, I know a lot of people do like STEM. It's a FinTwit favorite. It looks actually really interesting. We did some due diligence in Discord, and it looks really interesting. I will give you that. I need to do more work on that one. So, MP, I think that one got crushed. Apps, you want my thoughts on apps? Go. There's like 2 hours of videos. Nothing's changed. So go watch those videos on the channel. We did 2 deep dives on Digital Turbine. It's probably the best content you're going to find anywhere in Digital Turbine. So go check out the channel. Make sure you guys subscribe. Hit the like button if you haven't subscribed. That bell, get notifications. Hit the like button if you guys are getting anything out of this. It helps me out a lot. Shopify at these levels, it could always go lower, but I like it. If I look at, I'm going to turn these off. So if I look at Shopify, it looks like it bottomed out around 300 and change. I had this circled and it went way lower. So it did get to the bottom of that and broke it. So this was like 6 to 3. And we said that we had no idea where this is going to go. The calls were spotted up to that. It broke down. I would say it's possible it gets in the 200s, but I think 300 longer term, you'd probably be happy. But the problem is it's just really out of fashion right now, and you just have to be careful with those names. So, but CrowdStrike versus Datadog, 2 different things. Endpoint security. Go watch the Datadog exclusive. If you don't want to pay $10, there's a Datadog video I just did last week. It'll explain what Datadog does. It'll give you a much better idea. So go on the Fired Up Wealth on the home screen. There's a Datadog video on there. If you want a 30-minute or actually an hour exclusive video, that patreon.com above, you can go. There's a $10 tier that gives you an exclusive Datadog video. MP, Open Door, Butterfly, those are all, spec stocks that either boom or bust kind of thing, right? A few dividend stocks I own. I've got AbbVie. I've got some of the Fired Up Wealth favorites have been like, Tractor Supply Company. There's actually 2 DGIF ones on Tremendous 12. So that, again, if you go do that $10 tier, you get Tremendous 12 and the Datadog video. So definitely check that out. It's well worth it. It's 90 minutes. It has 2 DGIF stocks on there. But I have like AbbVie. I've got Nike. I've had Nike since 2012. Microsoft, Apple. My portfolio is 44% dividend stocks. So just so you guys know that, and I kind of build around that. ETFs, dividend stocks. I build around it with growth. And again, if you want to learn how to build a growth portfolio, there's a whole playlist on the channel you can go check out. And as I'm doing this, if there's someone in the group that wants to help me, you can post the links like right in the chat so they can find it. Some of these as we go through. Man, you guys are doing good with these questions. Steele's got a lot of strong opinions about his spec stocks. Any thoughts on Zoom video? Financials look strong. I think the financials look great. It's out of fashion, pandemic play. Some people think they won't survive because of competition. It really comes down to your conviction level. I still own Zoom, and I think that Zoom will be fine. I think if you look at the valuation on it and you look at the metrics, it's actually, it doesn't seem like it should be down here. But again, the sentiment is just so bad that nobody wants to buy it. It's actually trading at a 21 PE ratio. So to put that in perspective, Clorox was around 40. So Clorox, from a PE ratio, price to earnings, Clorox was double of what Zoom was, and Zoom's still growing very nicely. And it's a subscription type model. So, either you get Zoom or you don't. People that work in tech, most people will tell you that Zoom's going to be around. Others, they think that Zoom's going to have a business because Microsoft does the same thing. And, you say, well, there's no moat. I mean, we talked about DigitalOcean before, but there's not a lot of companies that really have a true moat, guys. I mean, there's really not. Even CrowdStrike, I like CrowdStrike. SentinelOne does endpoint security. Microsoft does. There's 7 vendors that do endpoint security. I mean, even like Palo Alto Networks, and Fortinet. I mean, those guys can compete in a lot of the same areas. And I have a whole video on the channel that breaks down cybersecurity if you're interested in that as well. Happy Saturday. You think Twitter will continue to go down? Hard to say. An actual smart stock. Let's see. Open Doors, damn cheap. Revenue in billions. Yeah, I mean, Open Doors is a SPAC, so it's tough. Home Depot, I've had that for, I don't even know, like 2012. I've had it a long time. I think 10 years. So it's been a good compounder. Elizabeth Holmes, that's right. I think Wynn's decent. Yeah, I mean, it's one of those that it's going to be a little bit cyclical. So it's going to get hit when people think we're going into a recession. But right now, Wynn's actually saying things are really good. So $56. If this thing ever got under $50, like it's hard not to buy some of that. But I don't own it, and it's been a nightmare. I mean, it's been an absolute nightmare since the pandemic. I mean, this thing was, what did it even get to down here? We got to $35. So it's still up over 100% from the pandemic lows, which rightfully so. I mean, they're still doing okay. But yeah, I don't follow like the tourism, hospitality and tourism industry very closely. I'm more software tech, semiconductors, but I do own some Airbnb, and I've got a couple other names too that I like in that sector. So Twilio seems good. I don't know the other one as well. You don't like Steele's very opinionated. Steele, buddy, what's up, man? You need to eat some breakfast or something. All right, so what else do we got? Let's go through Unity. Let's go through Unity really fast, and then the questions are getting slow, so I can wrap it up. It's been over an hour. If you got more questions, keep going. But yeah, Steele, the way I like to invest in those spec stocks is like 5 to 10% of my assets and kind of manage it. The problem with those kind of businesses in this environment is some of them aren't going to make it. Some of those companies might go out of business. So some of them could do really well and you can make a lot of money. So just understand like what your risk tolerance is. A lot of those names that you've mentioned, I actually think could do okay, but you just don't want to build, in my opinion, you don't want to build an entire portfolio just on spec stocks, especially in this type of environment, because there's definitely a lot of risk there. So it depends on the person. And I just want to make sure that I explain that because not everybody has the same risk tolerance as you. Okay. Cool. Big breakfast. It's good. All right. Yeah. NVIDIA is, great stock. I'm just messing with you, Steele. I'm just messing with you. NVIDIA, I mean, you can't go wrong with NVIDIA, but it's still expensive. So that's the only bad part about NVIDIA. It's like when a lot of people love a company, the stock has a premium and it gets expensive, and where does it end? But long term, I've been in NVIDIA since like the 30s, and I think the stock will do well. So Unity CEO says we expect to be profitable in Q4 after a rough quarter. And so what happened with Unity, guys, is they had a snafu with some algorithms on their advertising side of their business, which I think is actually going to be huge for them. And essentially it caused some losses, but those are one-time losses. The question is now, how fast can they fix these algorithms, make them work? I have confidence and conviction in this company. And he's basically saying here, we know our stock was a lot higher 9 months ago at the peak. And my sense is we probably had 10% too much spending in our business. So basically they got cocky, we're spending too much, but they realized they screwed up with this in the algorithm. They admitted it, did a good job, the CEO on Kramer, and handled himself very well. The opposite of Dave, unfortunately. And I like Upstart. I just think he was caught like a deer in the headlights, and it was unexpected. And I could totally relate. Like if I were in his shoes, I don't know what I would have done either. Like some people are saying, well, he was laughing the whole time. He's like, he was in shock. He didn't know what to say, and he didn't want to be rude. So it was an awkward interview to watch. But Unity and Roblox did better on those interviews. All three of them, went on Kramer, and this one's going to be a lot more of the, it has a combination because you got the AR, VR, you got a SaaS model, you got advertising. So I have the most conviction in this because it's the most diversified, and I think longer term that Unity will do well. But they are burning cash, and if you guys remember on my my breakdown I did on Patreon, and I'll try to find that and read some of this here. I did a really deep dive breakdown of all these. So Upstart, Roblox and Unity. And it took me like 2 hours to write this. I did it at like 1 a.m. after earnings to get the team updated on Patreon. And I wrote this, and I'm reading it right now on Patreon. And I think I sent this to everybody. So even the $10 tier got this one. So Unity has, so here's the one thing. People want to compare these businesses to like the dot-com bubble, but the dot-com bubble, they didn't have billions of dollars of cash. So even the companies that are burning cash to grow, they've got a lot of cash. So like there's really, the risk is not the same. This is not the same as the dot-com bubble. So Unity has $1.1 billion in cash. Now they do have a negative free cash flow, and they are burning cash to grow. So that's the negative, and they just made some mistakes. They also lowered guidance, right? Upstart has $900 million, okay, of cash and cash equivalents. They're holding $700 million that we mentioned earlier in loans. It does have earnings. It has a PE ratio. In fact, Upstart right now has a low PE ratio, which you could say, well, they're lowering guidance, and if all these things happens, it's going to contract. But it's a 23 PE ratio, and they're posting 100% plus gains, every quarter. So it's I don't know. It seems interesting to me here at these prices. It was interesting to me at 150. It's certainly interesting at 30, right? Roblox. So the risk with Upstart again is that they've got loan and default risks. Roblox, they've got $3 billion in cash, according to and these might be a little bit off. I just pulled it off a Google search really quick. But they had $3 billion in cash, and they are free cash flow positive. All right. So Roblox is actually free cash flow positive. And so I talked about like which ones I thought were, I kind of ranked them in order, and I went through and talked all the risks. I went through and listed some of the earnings highlights, things like that. Roblox they missed by 27, so EPS was negative 27. They missed by 8 cents. So that was part of the reason the stock sold off. Revenue increased 39% year over year. Okay, well, you want more growth for the price of sales that they're trading at. Net cash, free cash flow. So they had $104.6 million in free cash flow. Hours engaged were actually 11.8 billion. That's just crazy. 11.8 billion hours of engagement. That was an increase of 22% year over year. And the average daily users, the DAUs, was 54.1 million, actually an increase of 28%. So they've actually had more growth, more people using it, but they're spending less per user. That's basically what's going on. And that, I think at first it was a knee-jerk reaction because, again, all these companies reported earnings during the worst week possible, and that did not help. So a lot of these had knee-jerk sell-offs, and I think all three of them were overdone. I look at Unity, Upstart, and Roblox, and I'm still bullish on all three, guys. I mean, could they go lower? Could they do this and that? I mean, look at the business models. I've studied these business models for hundreds of hours into these three companies, and I still and maybe I'm wrong. Like I said, if I have 60 stocks, I don't need all 60 stocks to be right to still outperform the market over my time horizon. And some of these might go to zero, but a lot of them are going to be 10x. And overall, the basket of stocks is going to vastly outperform between now and 2030, 2032. So. All right, so Baba, let's see. So NVIDIA, you're the best. Thank you. What do you think of MQ and PaySafe? I personally am not a fintech expert by any means. There's some people that own. I would personally avoid PaySafe, but at some of these at these prices, it's like you could certainly make some money here. But PaySafe was one when it was way higher. I was telling people I wasn't a fan of it. And MQ, there's several people in the Discord community that own that one. It looks really interesting to me. I just, haven't gotten there. There's so many other stocks that are on my list. So, Splunk is okay. I mean, it's a lot more legacy trying to convert to cloud. I would personally buy a Datadog or something before Splunk, but Splunk is cheaper and, it's got some good metrics. So at $100 a share, what it's trading at, it's probably okay, but just understand that, they are being disrupted by some of these newer players as well. But they're not going anywhere, I don't think either, if that makes sense. I'm not an investor in any Chinese tech at all. I got out of that in 2019. I just think there's a lot of risk there, so you got to do what's best for you. What's your highest conviction stock? I've got a bunch of them. Do you think the market has already priced in all rate hikes for the year? It's hard to say. And we talked about that in the beginning of the video. You can go check that out. KnowBe4 Path, Procore, HCP, those are all decent names for sure. I'm a big fan of KnowBe4. I think the metrics on KnowBe4 are really solid. HCP is still burning cash, but I think long-term that's going to be a good one. Procore is a really interesting one that we've done some work on in Discord. And then, UiPath, I think is just, it's demolished, but I think longer term that one will probably be all right. I think Kramer recommended the stock to his cronies. Dutch Brothers, we're probably going to do a video with Matt from the Discord community. He's done a lot of research on Dutch Brothers. He's very bullish on it. And I'm probably going to do something with him in the next few weeks. And it'll be on YouTube. It'll be an exclusive and like a Q&A interview with him and a presentation. So watch out for that. Side time, I've covered on the channel before. I like it. It's still too expensive for me personally, but Starbucks is okay. Dividend stock. You could certainly look at Dutch Brothers too. There's a lot better things to buy right now, in my opinion, versus Starbucks. There's just, that's just my opinion. As the market bottomed, your thought, I talked about that earlier. If you want to go back and rewind, you can watch my thoughts. I did technicals in the beginning of the video, so definitely check that out. Now, make sure you guys subscribe and like if you haven't done that already, and I appreciate your support. Make something more interesting here. I'll go and look at, let's see. Let's go look at ARK. You can look at ARK's chart while I talk. Look at this. Went all the way back. What did I tell you last time? The bottom of the channel, $35, that it was possible. Well, it got down to basically $34. Pretty crazy. So, this is trading back to basically, I don't know, June 2018 prices on ARK is at the lows. It bounced really hard off of 34 to 43. We'll see how that holds up. New thoughts on Indy. They had great earnings. I think, it's still a long-term spec play. It's going to take time for that one. It is expensive here, but people believe in the management and the company longer term. And it will get traded. So it'll run up and then it'll crash hard. If it gets down in the fives, I think that's, for me personally, I think it's an opportunity. I think it was always a buy like, $8 or $9 and less. And so it has been hit, but it's held up a lot better than most SPACs by far. And I think it is a quality company, longer term, but it is spec because things have to happen for it to get to that. And they're supposed to be profitable at the end of next year. So we'll see how that plays out too. Thanks, Joe. Any thoughts on Indy? SoFi is the fintech to own. Path, any moat there, or is it big enough? Dave, that's a good question. So, Path. Are these helpful at all? I feel like I talk a lot. Of course, I have to, right? Because there's no one else here. But I don't know. I like doing these live streams. I feel like I can get a lot off my chest, answer questions. One thing I noticed, I think the ones that are asking a lot of these questions are new. So if you're new, welcome. Again, subscribe and like. This channel, we've been around since May of 2019. And, I started in the stock market back in the 1990s, just long-term investor, chipped away, built up, multi-million-dollar total net worth and portfolio just by investing long-term and buying quality stocks and holding them and, buying heavy on the bear markets. So a lot of that wealth was made during 2008, 2009, 2010. And I think this is going to be an opportunity. I don't know when the bottom is, but I think it's an opportunity to accumulate shares. And, you look 10 years from now, you might be in the same situation I'm in right now, And I didn't have a lot of money when I started. I came from very humble beginnings, single parent, didn't make a lot of money, and I, had to grind to get where I'm at. So I worked in real estate for about 10 years and then software for about 10 years. And this is what I'm doing full time. We've got a Discord Patreon community. I'm also a contributor for Motley Fool. We're on Twitter, TikTok. I've been doing daily TikToks. I kind of fell off the last couple of days, but I'll get back to that next week. Instagram, I can't grow that for the life of me. So if you want to give me a follow, I'd appreciate that. Facebook, I have a page I post on a lot. I'm most active really going to be on YouTube, TikTok, and Twitter. I also started a Snapchat recently, but subscribe, check out the channel. There's lots of good information. We've got several hundred videos and, mostly, outperforming the market, converting that into passive income and living off dividends, early retirement, financial independence, financial freedom. That's what this channel is all about. And if that's something that you're interested in, subscribe to the channel. So UiPath, where's it at? Dave. I think that UiPath, the problem with most companies, you say, well, what's its moat? All these companies have competition. What I will say though, and I wish I had this, I could easily pull it up and show you the Magic Quadrant. They are the best of breed. You've got Automation Anywhere. There's Blue Prism. There's Microsoft. Microsoft's kind of the next competitor, probably closest when you look at the scope and breadth that they can do, and when you look at the Magic Quadrant. But UiPath has been around a long time. I think they started in Romania in 2005. That's off the top of my head. I think that's right. And it was a very expensive IPO. A lot of these IPOs they got really juiced before we got to them as retail. And so in venture capital, VC market was already really expensive and frothy. Then it goes through an underwriting process. Everybody gets their hands in the pot, and all the accredited investors get their hands in the pot. All the institutions get their hands in the pot, and we get the table scraps. And then we run it up to Euphoria. A lot of us buy on FOMO. And let's see, no FOMO. Where's that one at? Here it is. No FOMO. Trying to use my Stream Deck. I got to get faster. No FOMO. But yeah, so I'm a bag holder on Path, but I'm not selling it. And I think it's a good company still. I overpaid for it. And I can see that now looking at the valuation, like it wasn't worth what and I didn't pay even close to the top, but I still have something like I think I got it down to 38 or something, which, isn't great, but it's better than whatever the hell it was, $90. So, it's trading right now at like $17. So this is one I'm hit pretty hard on, and it might take some time to get back in there, mid 30 range or whatever it is. But, does it have a moat? I think it's the best of breed. And that's the same with a lot of it. CrowdStrike, does it have a true moat? I think it's best of breed. So there's a difference between best of breed and moat, and most software related companies are going to be more best of breed than moat. And this is the problem. We talked about the other day, we had like a 2-hour impromptu live stream in Discord, and you and I talked about Adobe, and Adobe is like, how long can they hold that moat when people start using, these free apps and things like that, So I think that it's safe to say, like we talked about, that disruptors get disrupted. As investors, this is why you never I'm going to buy this stock and hold it forever. You really have to buy a stock. You make money on it for long term. I want to hold a stock for 3, 4, 5, 10 years. But when the story changes and that growth is like decelerating, or their competitive edge is lost, you have to move on. And that's why if you look at my portfolio, I still own stocks that I've had since 2010 and 12, like the Nikes and Home Depots and Microsofts and like that kind of stuff, FANG stocks. But there's a lot of stuff I had that I made a lot of money on and wrote it up and then got out of it, And that's going to be that way with a lot of these tech companies as well. Even like cybersecurity, will quantum computing disrupt blockchain? I don't know. Maybe, right? Will it disrupt the way cybersecurity works? Maybe. So it's important, I think, understand best of breed and moat, and that even if they have a moat, that it can be disrupted, and nothing's really bulletproof, especially in a capitalist society, right? So it's the best I can do. Looks like we had somebody wig out. That's fine. It was held for review, luckily, so you guys didn't see it. But yeah, you always have to have one of those guys. You always got to. It's unfortunate, it really is, but I do my best to be professional, and I'm live, so I'm doing my best here, guys. So really unfortunate that one person could try to ruin my afternoon, but I don't do this stuff for my health. Like I'm trying to help you, and if you don't like it, just leave, And it's ridiculous, man. There's so many clowns on the internet, and you wonder why I don't do more live streams. It's like it's this kind of crap, unreal. You can say what you want. At the end of the day, it's do what's best for you, man. I'm just here giving my opinions. If you don't like it, it's easy. You just click a button and you're off to another screen. I own crypto. We talked about it already. A lot of these questions are repeats, guys. You need to go back and watch the recording because I don't want to keep repeating it. I do own some crypto, yes, but it's very small. It's part of my spec bucket, and you got to do what's best for you, right? 5 best value buys. What do you think about Nucor? Don't know anything about Nucor. I'm glad that you like the live streams. SoFi, I've been beating on earnings. Latin America is going to generate lots. What else? Haters on every channel, ignore them. Yeah. I think with that, I'd probably just wrap it up, guys. So one bad apple, always got to root it for everybody else. But hopefully for the ones that got anything out of this, if you guys, like these videos, definitely subscribe, click the like button. If you've got more questions, I'm willing to stick around for a few more minutes. Looks like the questions are kind of I'm running out of gas. My voice is going. So anybody have any last questions? Hey, Robbie. I appreciate you stopping. Yeah, no, I appreciate it, guys. It's all good. It's been a long week, so I'm fine. Do you like Telluride? I don't know what that is. I'm sorry. I mean, there's so many stocks out there, guys. And here's the thing: like, I'm never gonna just like BS you and be like, yeah, I'm an expert on Nucor. Go buy some steel. Like, I don't know about it. Like, I'm not a commodity guy, and I've been investing over 20 years, mostly in growth and just companies that make sense, companies that I use like Costco and Home Depot, but then also like, the FANG stocks and NVIDIA I've had for a long time. And, now it's more of the data dogs and the, snowflakes and those kind of stocks, right? So those are the kind of stocks that I really know the most about. I worked in the software space for about 10 years and that's really what I'm most excited about as an investor as well for future growth. So Black Rifle Coffee Company seems interesting. I don't know a lot about it, but highest conviction trends for the next 10 years. If you want that, I mean, that's what the whole channel is. So semiconductors are the new oil. I've got a whole playlist on semiconductors. I think, SaaS, there's a whole, go on the channel and there's a playlist for every secular growth trend. There's one for AI, so artificial intelligence. There's one for cloud, software as a service. Disruptive technology. There's a bunch of different playlists, but I think that, AI is going to be huge. I think cloud is still in, early to middle innings. There's still lots to be made. Quantum computing could be an opportunity. Of course, autonomous driving is going to be massive, which is why I like Indy and I like, Tesla and even like NVIDIA. Those are the type of companies that have, so you think of the last mega trend that we really had, it was cell phones, right? So you think of 2008, we've got this whole cell phone into 5G, and there's still going to be growth in there, but we had this whole mega cycle. This is why Apple grew so much too. The next mega cycle, without question, is going to be electric vehicles and autonomous, which is why a lot of those stocks get driven to the moon because there's so much, hype and excitement. You just have to be careful with FOMO, careful not to chase no FOMO on these, because like Lucid, I'd love to buy some Lucid, but it's got to be at the right price. Like Rivian, maybe at the right price, but this, way too expensive because there's so much. Everybody wants to find the next Tesla, right? But I think that there's still a lot of money to be made in that sector. I think the easiest way to play that is going to be through the equipment. And I think Indy is a great play because you think ADAS, and a lot of the technology that they're working on. That's the oil that runs all these secular growth trends. So you're talking about like the best secular growth trends, semiconductors are the new oil because everything from space exploration to robotics to AI to cloud computing to genomics, everything really is going to be fueled by, at this point, semiconductors until that gets disrupted. And so for me, NVIDIAs and the AMDs and the Marvels and the Indies, and I've got even like Qualcomm, I've got Broadcom, I've had a lot of those for a while. Buy a semiconductor ETF even if you really are bullish on that space, and you'll probably do fine. SMH is one, SOXX is one. I'm a fan of SOX myself, but a lot of people like SMH. And you can see this thing has absolutely been crushed like a lot of things. It's going back now to December of 2020, and it could always go lower. The S3 is 345, but under $400 for me, I've been trying to accumulate in retirement and things like that. Hey, thanks, Caleb. I appreciate that, man. I appreciate it. You already did one, so Caleb throws another 5. I appreciate it. I don't necessarily expect that, guys, but I do appreciate it when you do it. I'm just happy to help, and most of the time people are really cool. Today we've had a couple guys that just have to be that way, but it is what it is. So. And I don't think anybody actually saw any of it because it was all flagged. So I don't think I think some of it printed, but most of the bad stuff no one saw except for me. So thanks for the value you shared in this live. Thank you. George, great channel, amazing content. I appreciate that because it's hard for me sometimes to keep making content because, it doesn't get views. I mean, The Datadog video I did has like 1,200 views, and it's a great video. I don't know what I can do. The sentiment for retail is that bad, and I just haven't figured out the algorithms, So, again, subscribing, clicking the bell to get notifications, watching the videos in their full duration, clicking like on videos, dropping comments. So like right now you're commenting, but there's going to be another comment section on the video. Come back and watch this video again. Let it play. Listen to it while you're working out, and drop a comment. Anything. Like, you guys should be like communicating to each other on that other chat, the one that's sticky, not the chat room that we're in now, but the other one on the left-hand side. And, you can basically have conversations that's going to spark the algorithm, because at the end of the day, YouTube's a social media app, and it wants people to, to basically have conversation and more comments and things like that. It's going to drive, more algorithmic activity for the channel and things like that. My voice does usually get tired at about an hour and a half, so I do need to wrap it up. We're going to go on 2 hours here. I'm going to go through the rest of this, and then we'll call it a day. And I appreciate you guys very much, and I appreciate you hanging out with me on this Saturday morning. So Apple Car, I think Apple Car could be a big deal. But the question is what does that look like? Do they buy like another vendor, or do they try to do it in-house? I don't really know. It's interesting though. But Apple Car could be a big thing. Could be. On semi, are you a believer? On semi? Yeah, semiconductors, yeah, absolutely. Is T-stock market drifting down? Talking about AT&T? Sam, I appreciate. Have you seen what Snap is doing lately? Their AR tech combined with social commerce. I think Snap's really interesting. I'm not an investor in any apps, and the only one I have now is Airbnb. So like, I'm not touching Facebook or Twitter or none of them, because they have no recurring revenue. They have to rely on advertising. And if I want advertising, I'm just going to buy a Trade Desk, or I'm going to buy Digital Turbine, or I'm going to buy Unity, or even Snowflake. And for me, that's a better play, because I'd rather have the picks and shovels behind it than actually have the app, where the app has to rely on people like me as a business owner to go spend money advertising to attract people like you. And when the economy gets bad, recession gets bad, like the first thing I'm going to cut is my advertising dollars as a small business owner. And those are the type of companies like mine that would advertise on something like that. So it's hard for me to own those, is because I don't like anything that doesn't have recurring revenue, unless it's something like Home Depot, where it's like, it's sticky, people are going to use it. You know what I mean? That's part of the reason I like Costco, because it has a subscription model baked into, basically a consumer staple, which is also why it trades at like a 40 PE, which is probably too expensive. Salesforce seems to trade high PE. You don't really use PE for Salesforce because it's SaaS. So you got to use EV/NTM. Okay. If I look at Salesforce on an EV/NTM, let me just pull up my handy dandy spreadsheet. Let me look at this for you guys real quick. Rest my voice. You guys need something different to look at. Here, you can read some more Roblox stuff. All right, so Salesforce. Salesforce is a 45 rule of 40. Free cash flow 20%. I'm actually surprised it's not higher than that. It's probably because they invest a lot with their venture capital arm too, right? So Salesforce right now is trading at EV/NTM is only a 5. That's cheap. That might be the cheapest it's ever been. It's a 5.1. So I wouldn't use a PE ratio necessarily on that. I know that people want to, but that's really how you compare it, because it is a SaaS model. So thank you for everything, Sparky. I appreciate it. No one else is doing this. Indie video. Indy was on the Tremendous 12. Thanks for spoiling that, Dave or Pete. Just kidding. If anybody hasn't watched the Tremendous 12, honestly, like, especially now, all those stocks are even cheaper than before. So at these price levels, to go 10x from here, it's not going to take nearly as much as it was a month ago when I did the video. So check out that. You go to patreon.com/firedupwealth. $10 tier gets you that video, as well as lots more. Go check it out. And I know I'm pushing that, guys, but this is what I do. And I told you this last time. So YouTube for May right now is, let me just look it up. I'll tell you the exact number. A lot of people assume that if you've got like 25,000 subs that like, somebody attacked me 2 days ago saying like Google pays my bills. My estimated revenue right now is $475.07 for the month, which, that's fine. It's great. And but at the end of the day, there's no way I can do stuff like this if it's for $475 a month. Like on a Saturday where I have little kids and I have a family that are literally hiding in the other room waiting for me to be done. Like I want to help you guys. I really do. But at the end of the day too, I've got to make a couple bucks on it, like, and people, a lot of people hate on that and they say, oh, well, this, you only do it for the money, this and that. If you'd have more subscribers if you didn't do it that way, hey, whatever. Some of those guys have 200-300 subscribers. It's a whole different can of worms than what we're doing. And at the end of the day, guys, we're the community live and breathes. Like YouTube's important. Everybody's important. But we can take it to a whole nother level in our private community with Discord. And anybody that's on here right now, if you're in the Discord, you need to tell everybody else why they should join Discord. Because they're not going to listen to me. They're going to have to hear it from you saying like, yeah, it's useful. Like there's no reason that you shouldn't sign up and give it a try. But a lot of people just assume that it's like, that it's not worth it. And it is worth it. Check it out. Worst case scenario, you leave if it's not for you, right? Okay, so I promise I'm done. I won't say another word about Patreon, okay? What about Google? I like Google a lot. My cost base is under $1,000 on Google, and I'm not selling it. So I like it in this price level or lower. And not, just my opinion. I'm not a financial advisor. Everything I say on here is opinion. Don't hold me accountable. Do your own homework. I'm a fan of picks and shovel plays too. That a boy. Is it time to sell UiPath? It would be the worst time in the world to sell UiPath. If you're going to sell UiPath, I would have done it sooner. That's just my opinion. So enterprise value. So EVNTM is a way to look at SaaS companies. You can also look at Rule of 40. And so you're looking at a whole can of worms here, but you can Google EVNTM if you want to look into enterprise value, right? And just go Google it. Let's do it together. How about we do it together? All right. I'll show you so that I can give you the definition. So this is one way you can measure SaaS stocks. There's a magic number. There's Rule of 40. There's lots of different ways you look at it. Grit score is another one. So Bessemer Capital. That's the index behind WCLD is Bessemer. You can go look at Bessemer Ventures. So this is good. This is from 2017. And just a quick look here. So financial metrics. So here we go. So what we're doing is we're basically taking a combination of the next 12 months of enterprise value. Okay. So it's using the next 12 months enterprise value and EBITDA. So that's earnings before income, taxes, depreciation, amortization. So there's NTM, EV, EBITDA, and there's also the EV NTM. And you can go do some research on that. There's actually an entire video on the channel that breaks down how to value, these SaaS stocks, Rule of 40, how to calculate Rule of 40. Go check out the channel, and that's a can of worms. You could spend a lot of time looking at that. So, okay. So thoughts on PayPal. There's better stocks, I think, at this price level, but I think PayPal will probably do okay long term, but it has more risk than some others maybe. I've covered Snowflake. It's one of my highest convictions. If you want to know more about Snowflake, rewind because we covered that in detail. So that is, do you have a tier that offers cute selfies? No, I thought about OnlyFans, but maybe someday. Now my video is probably going to get blocked by Google because I said that. The algorithm's like, no soup for you. All right, cool. So Salesforce is great. Both CRM and Hubs, my favorite play. Thoughts on Salesforce and PayPal. We just literally covered Salesforce. Appreciate your time. Thank you. I want to join. Money's tight right now. Join the $10 tier. Check it out. There's a free Discord, by the way, if you guys didn't know. So go in the description of the video. Actually, right. So it's right here. Let me give you the link. So click on this link right here, right? This link right there. That link right there, click on that, and there's a button that says free Discord. You can go, obviously you're not gonna have access to all the channels, and there's a lot of channels that are hidden, like the elite channels, the platinum channels, the VIP channels. But you can get in there free to get a sense of what it's all about. And then when you're comfortable, if you want to upgrade, you can. And there's different ways to do that. You can do it through Patreon, or you can do it through a Me 6. You can do it that way as well. So that's about it, guys. Bill is one that I need to do more work on. It looks really interesting. The numbers are very attractive. It looks very juicy. Matterport is a spec. We own some in the Fired Up Wealth community portfolio. It's either going to be a 0 or a 10x. It's a very speculative play. NVIDIA and AMD, I believe, are both strong buys. Of course, lower the better. And then, Matterport we just talked about. So that is all I got. My kids are in the other room. It's been almost 2 hours. I hope you guys enjoy your weekend. It's May 14th, Saturday, and I will plan on being back next weekend to do this again on Saturday, probably the same time, maybe an hour earlier. And then we're going to take a week off from this, but I plan on doing this cadence. So if you have not done so already, I need you to subscribe, click the bell to get notifications, because sometimes I go live just for fun, impromptu, and you want to join. And then also make sure you click the like button. So subscribe and like. Check out Patreon, check out Discord, check out whatever. We got all kinds of stuff. And I never used that big camera once. I was going to use this big camera. I had this cool button I added to make my screen bigger, and I never used it till the very end. I will get better with these streams. This stream deck is awesome, and I'm going to get better using it. And you can tell even from the last stream I've added more stuff. I'm going to keep adding visuals and sound effects, and I could add music. I can play some music right now. You hear that? I can do all kinds of cool stuff with this stream deck. So Grim Reaper, what we got here? We got all kinds of stuff. I'm going to turn all this off. Okay, cool. So you guys have a great weekend. I appreciate your time and attention. Have a great rest of your day.